Welcome to The Marcus Warren Show, powered by 960 Digital and the Wealth Empowerment Network. Now, here is your host, Marcus Warren.
All right, here we go. It's The Marcus Warren Show, the #1 retirement and tax planning show in the region, where we cut through the noise, call out the BS, and bring you the no-nonsense take on retirement, the economy, business, and everything in between. I am your host, author, financial advisor, and tax strategist, Marcus Warren, and I hope everyone is doing well on this Friday. And actually directly in front of me, I am joined by our resident tax enrolled agent, Dee. How you doing, Dee?
Hello, and happy Friday.
Also, if you didn't know, we are giving away a copy of my book, The Retirement Playbook, which is a book packed full of information that will help rescue your retirement from all the risks that threaten your nest egg once you are close and in retirement. We're talking about market risk, inflation risk, and more importantly, tax rate risk. You got to protect your hard-earned money from the IRS, and you can order that by going to warrenwealth.net. Go to the site, put in your information, and a copy of my book will be delivered free of charge to your front door. Once again, all you have to do is go to warrenwealth.net. Hey, also on that site, we are doing a webinar at the end of October, October 29th.
That's right.
October 29th, we are doing a webinar on the election, the retirement election stress test webinar, where we will go over and about what we want to do is we want to alleviate the anxiety that people have in regards to their retirement dollars and the election coming up. So we're going to do a webinar on that. You can go to warrenwealth.net to register and sign up for it. All right. So today we are going to talk about something that's been making headlines, and you probably guessed it. It's the Federal Reserve's recent rate cut. What does that mean for the economy, for inflation, and more importantly, for you? So buckle up, because we're about to get into it.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, money, money,
Dollar.
All right, so let's kick things off with a little Fed 101. So what the heck is a rate cut, and why should you care? Well, when the Fed cuts rates, they're basically lowering the interest rates that banks charge each other to borrow money overnight. Now, that might sound something like the tech bros, but the finance bros would love. But actually, it does matter a lot. It basically, when they cut rates, it makes borrowing cheaper across the board, which means lower interest rates on everything from your mortgage to your car loan to those pesky credit card bills. Now, recently, I guess it was this week, the Fed slashed the short-term borrowing rate by 50 basis points, basically 0.5%. And that's really after, 2, 3, 4 years of jacking up rates to fight off inflation. And now they're taking a different approach. But what does this really mean for the economy? So we're going to break it down here. All right. So the big question here is, are we about to see inflation make a comeback because they dropped the rates? And no, not necessarily. There is this myth that lower rates or lower interest rates automatically lead to runaway inflation. But that's just not how the economy works. If you go back to 2010s, remember way back in the 2010s?
Oh, yeah. Long time ago.
Well, basically, we had near zero interest rates for almost a decade. And guess what? Inflation barely moved. All right. So what actually drives inflation then? It's just not the Fed's interest rates. It's really a complex mix of government spending, consumer demand, and global factors, right? If you remember back in 2020, we had
supply chain issues.
Yeah, supply chain issues with the pandemic. So it's a lot of different factors. So while rate cuts might make money a bit cheaper, you don't have to get all nervous and think inflation's going to go up and start, hoarding canned goods and looking to jump into gold or buy gold bars just yet. Really, the reality is we've seen low rates before without interest rates just jumping up. All right, so relax. All right, so let's get to the part that you really care about. What does this actually mean for you? What do these Fed cuts mean for you? So if you're carrying any debt, mortgage, auto loan, credit cards, you're in luck because you might see those rates dip a little, especially on mortgages, which have already started to drop as the market was already betting on some of these Fed cuts. But don't get so excited just yet. Don't pop that champagne bottle just yet, because we're not talking about massive windfalls here. We're talking about small incremental changes because the Fed isn't slashing rates to zero. So those other loans, like your credit cards and personal loans, that might not see much relief. And if you're stuck with federal student loans, sorry, this rate cut won't change a darn thing. The government has those rates locked in tight, I tell you. All right, so let's talk about savers. So if you've been enjoying these higher interest rates on your savings accounts, yeah, they're about to go away. Banks will cut those rates faster than you can say recession, because guess what? They're not in the business of giving away money. As a matter of fact, was it the day of the cut or the
yes?
Yeah.
Immediately.
Yeah, the day of the cut, we received notifications and emails from the institutions that we partner with that, hey, you need to let your clients know that, hey, we're dropping our savings rates, our money market rates, things of that nature. So they do it very quickly. But anyway,
They're quick to cut, but they're not so quick to raise those up when the Fed raises interest rates. Well, I'm just saying. That
is true. That is true. But you also got to remember this too, that the lower rates can also be good for the stock market. Why? Because when safe investments like bonds or CDs, when they pay peanuts, more people pile into stocks, which could push the stock market higher. Now, that said, I wouldn't bet the farm on that, because trying to time the market is not good. It's like trying to catch a falling knife. You're going to get hurt more than anything. So keep your head on straight, diversify, and don't get too greedy. All right. Lastly, let's talk about housing, because you might think that lower mortgage rates would make homes more affordable, right? Well, not so fast. Contraire, mon frère. The housing market, it's a mess right now, and affordability is still in the toilet. Even with lower rates, there's just not a lot of supply out there in the market. Builders are not building fast enough, and people with low rate mortgages aren't exactly itching to sell. So while you might see mortgage rates drop a bit more, don't expect to score a bargain on that dream home anytime soon, because housing affordability is going to be a long-term problem, and it's going to take more than a Fed rate cut to fix it. All right. So here's the bottom line. The Fed rate cuts, they're aimed at keeping the economy steady. But of course, there are no guarantees. So whether you are a borrower, a saver, an investor, just make sure that you know and understand how these changes will affect your wallet. As always, if you have questions, if you need more information, you can go to warrenwealth.net. We'll have information out there, or you can click Talk to Marcus, a quick 15-minute phone call to discuss your specific individual situation. But those are the resources that we have out there. Education is key, people. Education is key. All right. Coming up next, we're going to get into some news you can use and news you can't use. You're listening to The Marcus Warren Show.